All right, well, welcome tonight to our talk about taxes and accounting for you as a Team Beachbody coach. And tonight we've got on the line Donnie Happel from Accounting Unlimited, and I have used them for a number of years in the past. For Beachbody as well as other at-home businesses, and it's always been a pleasure working with them, as well as just knowing that they do a really good job. So he is going to share with us tonight a bit about what you can expect to for and track with for your exemptions, deductions, that sort of thing. And he knows way more than I ever will. So with that, Donnie, I'm going to pass it over to you.
Great. Thank you, Tracy. Like she said, I am Donnie Happel. I do come from Accounting Unlimited. Our headquarters office is down here in Clarksville, Indiana. We currently prepare tax returns for clients in 39 states from really 5 locations now. We've moved down and started preparing tax returns down in Knoxville, Tennessee. We're in London, Kentucky. Our headquarters here in Clarksville, Indiana. We have an office up in Greenwood, Indiana, and also in Dayton, Ohio. Gosh, we started in 1981. My mom actually started the company. I took over 11 years ago Thursday, and it's been a ride ever since. And our whole focus is on small businesses because we feel that most small businesses are lacking in services and information and advice without having to pay, $1,000 to get your tax return done. So what we're going to work from, and if everybody wants to go out to my website at accountingunlimited.com, we're going to work directly from one of my worksheets that's free out on my website. So if you go to accountingunlimited.com and go to my forms page, we're going to work from that worksheet number 9 in that list. It's a sole proprietorship worksheet. It is a general worksheet, so you could use it. My electricians and plumbers and everybody can use this worksheet. So there's going to be some categories here that we're not going to use for you all specifically, but most of the rest of this is going to pertain to just about any small business. If you're going to try to prepare your tax return yourself, and we work with every kind of business you can imagine, but if you're going to try to prepare your tax return yourself, you're going to need to know a few forms and schedules that are going to add to your regular 1040. Your small business is not a separate tax return. It is additional schedules as part of your personal tax return that you're usually filing every April or by every April. So if you're going to try to do it yourself, you're going to need a Schedule C, and that's where the bulk of your information is going to go. You're going to need a Schedule SE for self-employment. You're going to need a Form 8829, and that's where we deduct your office and home expenses, and a Form 4562, which is where we deduct any kind of assets or things, computers, desk assets get depreciated. So you need those 4 forms if you're going to try to do it yourself. If you get stuck, call us. We'll be happy to help. We never give a seminar to anybody that we're not willing to bring on as new clients. So if you guys need help, we are always here. All right. So let's get started. So every piece of documentation with your tax return, of course, needs a name and the year that it pertains to, not necessarily if you're going to fill this out in January 15. We really want to put January 14 on it for that tax return documentation. I'm going to pause briefly as we go through all of this so we can take a few questions, so we can maybe hit some of those questions as we get to some topics. So if you have those questions, feel free to ask. Total income, that's pretty easy, right? That's everything that you guys receive as income. If you are, the easy part is your commissions. But if you're doing any kind of additional coaching, additional training, you're going to have that additional income that you're going to add to your Schedule C. Tracy, when you guys sell the products off your website, you're just getting those kickbacks from Beachbody, right?
Correct. Only Team Beachbody pays us.
Only Team Beachbody.
Correct.
Okay. So you're going to get all that on a 1099 from Team Beachbody at the end of the year, okay? And then we're going to start taking those deductions from there. So when we talk about those deductions, there's some inventory items up towards the top. And that's not anything that you guys are necessarily going to need, because, correct me if I'm wrong, Tracy, everything you have is drop shipped. If somebody orders something through you, it's drop shipped to their house. You guys really don't keep an inventory.
That's correct.
Okay. So if you do purchase something that you in turn sell to a customer, that of course will be income, and we're going to want to take that as a deduction. But since the majority of all your income is a percentage of the sale, we're really just going to have that income, and there's really not necessarily a cost associated to that.
Hey, Donnie.
So as we come down through there, yes.
Sometimes we will buy sample packets, and then we'll sell those sample packets. Say somebody wants to try Shakeology for 1 week, and we'll sell them 1 week's worth. Would that go under inventory?
We can. We want to make sure that we distinguish between, and that'll be in as part of total purchases is what that's going to be, as part of the cost of what you're selling.
Okay.
So in total purchases would be the cost of those samples. But we want to make sure that we distinguish between the samples that you're buying to give away or to sell to, a potential recruiter or a customer. Excuse me.
Yeah, that's pretty much what all
between that and your personal use type of stuff.
Okay. Okay.
Because the supplements you buy for yourself are not going to be deductible. All right. Okay. So we're going to get your samples there. So your beginning inventory, ending, closing inventory, those are going to be blank. Total purchases, you can really write out to the side of that your samples, and we can get a total of those. Personal use, that more relates to if you had a shoe store and you were taking shoes off the shelf, you bought them as part of your inventory and you were taking them off as personal use, we'd have to subtract those away from your total purchases for that year. But for you guys, if we just include in your total purchases the samples that you're reselling or that you're giving away, then that'll kind of encompass that. You won't have to worry about any personal use. All right, does that make sense? All right, so advertising. So we get down underneath closing inventory. And advertising can be the easy stuff, flyers, business cards. We usually like to deduct your website inside advertising. So I'm looking at Tracy's pretty awesome website that she's got here. So whatever that cost is to create that website is deductible, and we want to make sure we capture that. And then we like to deduct as advertising anything that is the clothing items that you buy that has the labels on the outside. So if it's an Insanity t-shirt or, something like that, something that says Team Beachbody on the outside of that, we want to deduct that in advertising. We don't necessarily want to use a uniforms expense for you. It's more of an advertising expense because we want to promote what you do. So we want to deduct those in advertising. You guys really aren't going to have any bad debts. So Tracy, let me ask you this. Do you guys, is it just through Team Beachbody? Do you guys do some personal coaching on the side?
Some coaches may be personal trainers, but definitely not all coaches.
Okay. So we've got a little hybrid here. So for those who are personal trainers, and we'd have to kind of look at how much money you're making as personal trainers, but you're going to have some other workout clothes that will be deductible. Okay. And we can kind of talk about that individually. So if anybody has specific questions, they can email me, or you can give the office a call and we can talk about specific scenarios. But personal trainers are allowed to deduct those workout clothes. It's their shoes, and it could be yoga pants or gym shorts, or whatever that might be.
Hey Donnie, could I ask?
And for those, sure, go ahead.
A lot of us do teach group fitness classes, but we would be paid. So say we teach at the YMCA. There would be a lot of coaches who do that. Would that be in the same category where possibly, your tennis shoes or stuff like that would be deductible?
Absolutely.
Okay.
Yeah, because anything that you're using to generate that income,
okay,
is going to be deductible against that income. So we can't really teach a fitness class at a YMCA with flip-flops, right? So those tennis shoes and those workout clothes would be deductible for you.
Okay. There is one other question on our little chat that you may not be able to see. Mm-hmm. Is it okay for me to ask it now?
Sure, go ahead.
Okay, so when you were talking about our products for personal use, like our supplements that we're using, as a Beachbody coach, I would say all of us drink Shakeology. And so part of our requirements for being an active coach is to be using that as a product so that we can then share the results with other people. So it's sort of, I mean, yes, we're using it, but at the same time, it's kind of a requirement that we do. Does that keep everything the same way that you said it, or does that change anything in your mind?
Yeah, it really doesn't change anything, because it is something that you're consuming and that you can't really, you can see the results of it, but you really can't see immediate effects from it. So what I do is I kind of compare this back to the models that I take care of, okay? They got to stay in shape. They're taking supplements to stay in shape. They're working out, but that doesn't necessarily make those deductible. But their makeup and they're getting their hair done is deductible, because we can see that on the outside. It is a look, it is a presentation, okay? Things that are consumed, even though they are nourishing and helping us be healthier, doesn't necessarily make those deductible. And I understand, and we can even talk about, I take care of a lot of Avon and Mary Kay consultants as well. We actually have to, because they buy all their product at the same time, and then they take their personal use stuff off the shelf. So the stuff that I can't see when they wear it, they can't deduct that either. So their cleansers and any kind of nail care or body care type of stuff is not deductible for them either. Even though we can see the effects of it, it doesn't necessarily make it deductible. Does that make sense? So the short answer is no, you still can't deduct it.
Okay, fair enough.
Okay. I'd love to say yes, but we've been through some specific cases, because you guys know how many supplement companies are out there, and we've seen them all, and they all lose their personal use piece. It doesn't matter if it's shakes or vitamins or juices or whatever that might be. We always lose that personal use piece. Okay.
Can I interrupt and ask a quick question?
Sure.
This goes along with what we were just talking about with the Shakeology. My husband, we order for myself for personal use, and then my husband is also a coach, so we get Shakeology for him as well. But he does not consume any of it. In his Shakeology is what I use for samples and to give out to other people and things like that. So with that,
sure,
his Shakeology be
absolutely
deductible? Okay.
Absolutely. So if he's not consuming it, it's not personal use, right? You're buying it for the purpose of either selling it to someone else or giving it as a demo or, you know, as a sample. So however you buy those samples, I don't care if it's under a person or as an actual sample, it's still deductible as a sample. So his would be, because it's all about the purpose of the product, okay? So if you're buying it to consume it, there's no deduction. If you're buying it to give to somebody else or to sell to somebody else, absolutely we can take that as a deduction.
Okay, perfect. Thank you.
We just have to make sure, no problem. So just make sure if you ever sell it, we got to make sure we add that into your income that you're earning for that year. All right, so underneath advertising, most people don't necessarily report bad debts anymore because if somebody, God forbid, you sell something to somebody, they write you a check and that check bounces, we're just going to take that income back out and not report that income because you really haven't received it yet. So if you just put in income, the money you've actually received, then nobody's really going to have anything to report on that bad debts line. For those of you who are personal trainers, and again, I'm going to apologize to everybody. I am a wrestling coach, and I've completely worn out my voice this past weekend, like I do every Saturday, yelling at a bunch of sweaty teenagers. So I apologize. So insurance. For those of you who are personal trainers, it might be something you guys need to think about if you don't already have it, is some kind of business liability just in case somebody gets hurt. It's probably not going to be a lot of money. You can check with your local insurance agent. I always recommend people go to an independent insurance agent and not what I call to any of the big box guys. If your insurance is with a State Farm, a Farm Bureau, Allstate, a shelter, most of those have just one brand of insurance. There's really no price comparisons that are happening. You ask them for car insurance, they give you one number to choose from. You want homeowners insurance, you get one number depending on what your house is worth. An independent agent will shop 3 to 6 insurance companies, and they're just as good of insurance companies, and in some cases bigger insurance companies than the ones you're dealing with now. The benefit that you get is those insurance companies are going through an insurance broker, and they don't necessarily spend the money on all the advertising. So if you see a commercial on TV that's an insurance commercial, you can bet that there's some built-in cost for the advertising of all of those commercials that you see on TV. So by going to an independent agent, you'll probably get a little better insurance for a little less cost. And I recommend everybody to shop their insurance every couple of years, but specifically to protect yourself as a personal trainer, you probably want to look into getting some kind of business liability insurance just in case, God forbid, somebody does get injured in the process. Okay. Tracy, do you guys go on, have any trips or seminars or conferences you guys go to during the year?
Yes.
Where does that usually take place?
It varies. The last couple of years, our national one has been in Las Vegas. This coming year, it's in Tennessee. But there are also, depending on the level of coach, there are other things throughout the year, trips that are taken.
Gotcha. Okay. So those conferences, and the reason why we're going to get to that is we're going to talk about your vehicle. Your vehicle is probably, maybe besides your samples, if you're selling a lot of samples, your vehicle might be your biggest deduction that you have. So if you're driving around, talking to people, providing them samples, doing your personal training, you're going to have a lot of mileage to deduct. And even if you decided to drive to Las Vegas for your conference, that mileage is going to be deductible. And what we want to make sure we do, there is an app that we have that we've published out there. I'm part of a national association, and something to help you keep track of your mileage. It's called Tax Pocket. It's all one word. It has a GPS mileage tracker in it so that you can log where you're going and what you're doing. You can hit start when you pull out of the driveway, go to the gym, do your training, whatever your business day looks like. When you get back home, you hit stop and save it, and it logs it into a mileage spreadsheet that you could send or print off at the end of the year. Tax Pocket's all one word. There is also in that app an expense tracker piece to help you keep track of all of your expenses. And there's already categories set up in there. And what that My Tracker piece looks like is allows you to take a picture of your receipt, fill out what that expense was for, if it was for a meal or if it were dues at the gym or whatever that might be, or a receipt for your samples. You can take a picture of that receipt, save it into your spreadsheet, and it will keep track of those all year for you. And then if you wanted to, you could actually link your app to me. So you could look for me as Donnie Happel. And if you were going to have us do your tax return, because you can use the app as a guest, but if you were going to use us to prepare your tax return, you could actually send us your mileage log and your expense and income report, and we'd be ready to do your tax return. I'm really pushing all of my small business people to become paperless. Receipts are hard enough to keep track of as it is, and we thought we got rid of that old nasty thermal paper, fax paper that was in everybody's fax machines 10 years ago. But now it's back, and it's back in force. All of this flimsy receipt paper that you're getting out of every gas pump, Target, Walmart, you name it, is just a heated image on that receipt. And within a few weeks, that receipt starts to fade because that heated image is going to fade. Most audits with the IRS don't happen for 3 years. So what do you think that receipt's going to look like in 3 years if IRS wanted to take a look at your income and expenses for your business? We'd be looking at a box full of blank receipts. So I'm pushing all of my small business people to find some way to go paperless. If it's in an app, and there's a lot of cool apps out there, if it is creating folders on your hard drive for each year, and using the categories on this worksheet for samples and income and advertising and supplies and office expenses, and all of those different types of things, and creating a folder for each one of those, and just using the scanner that you have. Most people have some kind of multi-function machine, and get those scanned in. And as long as you have a backup of your computer, I would tell you that you wouldn't even need to keep the paper receipt. I have multiple redundancies in my backup system here at my office. So as soon as I scan my receipt in, I literally take that meal receipt or office expenses from Staples or Office Depot, it gets scanned in and it goes straight in my shredder. So, and that way, to be able to reproduce that as a really clear image would be pretty easy for me. Okay, so it's something to think about. If you don't have a scanner, you probably need to start moving that direction to try to get paperless. So back to your vehicle. Your mileage is deductible to the rate of 56 cents a mile. and I get a lot of clients that tell me, I didn't drive that much. But for every 2 miles you don't want to keep track of, take $1 out of your pocket and throw it in the trash, because that's really what we're talking about. If the gym's only, 5 miles away, that's 10 miles round trip. That's a $5 deduction for one trip to the gym. Okay, so your mileage is critical. It is the least appreciated deduction because not many people give it much attention, but it is a very powerful deduction for you. There's 2 ways to deduct your vehicle. One is we just take 56 cents a mile for the business total of the business miles that you drive. And the other side of that is we can either take that so many cents a mile, or we use a percentage of use of the vehicle. So if you have a lot of miles that are part of your personal training or just your business miles in general, we usually see people that lease vehicles usually end up with an actual expense deduction that's higher than the 56 cents a mile. So it might help you for at least your first full year. So let's say 2015, you keep everything for your vehicle and then let a professional decide which way is better to deduct that. Because we're talking about a percentage of all of the oil changes, gas, repairs, interest, insurance, the tax on the cars, a percentage of the lease payments. So when we start talking about that, it gets to be a pretty big number pretty fast. But it's really critical that you keep track of as many miles as you can.
Hey, Don.
Commissions paid to other people. Yeah, go ahead.
Sorry, I just was going to insert a question. Just to double check, the nature of our coaching business, we do, well, just like that with P90X, those are home workouts that we're doing at home. So typically, as each new workout comes out, we try to buy it and then we try to use it. Would that be under personal use?
If we're talking about the workouts themselves, and you're talking about...
Okay, thank you. Okay. Donnie, I think you're
let
go
me
ahead.
see. That's all right. So you're talking about like the Insanity or the P90X or the T25 or whatever those are, right?
Right.
Yeah, that wouldn't be a problem. We could deduct those because it's different than your supplements because it's an actual tangible thing that you're going to keep. So I would say that if you purchased each one of those different workouts as they came out, those would be deductible for you.
Okay, awesome. And then the other part of that is that sometimes we will purchase extra workouts or extra, I don't know, say a shaker cup to give away as prizes. Where does that fall in?
So you could your prizes, there is a miscellaneous line down there. So if we don't hit something as we go through all of the other expenses, you could list those out separately as prizes, incentives, or whatever you want to call those. I would probably put the purchase of the workouts themselves up with your samples in total purchases. And those prizes that you're giving out to other people, I would list those separately.
Okay. And you said that they had also been instructed that they could put the workouts under continuing ed, since we have to basically learn the product, know the product to be able to sell the product.
They're just as deductible either place.
Okay.
The key is making sure we keep track of those and take them as a deduction.
Okay.
So continuing ed would be just as good as putting them in with your samples.
Okay. Okay, perfect.
So yeah, not a problem.
Okay.
Yeah, it would be the difference between what we would consider the difference between office expenses and supplies.
Okay. Okay. Cool.
So your supplies could be some of the stuff that if you were a personal trainer, some of the things you take with you. If you're using those stretch bands or, you know, whatever that might be, those might be your supplies, and your office expenses are the pens, pencils, paper, all that kind of stuff that you're going to leave at home when you go do some personal training or whatever. In the end, it really doesn't matter which place they go. They're just as deductible, just like your workouts would be just as deductible in either place as well. If IRS had a problem with where they were, they would just move them to another category. But it doesn't make them non-deductible. They would still be a deduction for you. I don't think you guys have much in commissions that you pay to other people. If you have a business credit card that you use, as long as it is 100% business use, you can deduct 100% of the interest and the annual fee. If you were really good all year and you had your business card and you're using it religiously just for business, and we got down to last Friday and we bought little Johnny a pair of shoes on your business credit card, you just lost the interest and the annual fee for the whole year. Okay? So this is an all or nothing thing. Interest on business loans or credit cards is an all or nothing. So if it's all business, we can deduct it all. If it's not all business, we cannot deduct any of it. Okay? If you're one of those people that were really good until last week, we got to make sure that you write a separate check for that personal charge that hits your business credit card to pay that part off of that card, and then start deducting that interest this month or whenever you to get that taken care of. Legal, accounting, and professional fees, that's pretty easy. That's me. I'm always deductible. Mileage to come see me is always deductible. We'll always give you a receipt. So as long as you had a Schedule C on your tax return the previous year, your preparation fee is deductible on that business tax return the following year. Office expenses, again, that's everything that's in your office space. The pens, pencils, paper, we can leave your printer in there. Printers are pretty inexpensive anymore. Calculators, the miscellaneous type of stuff that, you know, sit at your desk and look around you. It's all deductible. For those tangible items, your computer and your monitor and your desk and your chair and maybe your file cabinet and your shelving, those tangible things, let's say you had them before you became part of Team Beachbody. If you had those before you started your business, this is the only time you're allowed to write your own receipt because they are tangible things, and it's not like a supplement that you gave to someone. If you don't have that receipt, you don't have a deduction, okay? But these tangible things that we could walk into your home and be able to put our hands on that computer and on that monitor and that desk and chair and cabinet and shelving, you're allowed to write your own receipt. So let's say you started your business July 1st. So we're going to date our own receipt, July 1st, turn it into business use, one desk, one chair, and just list all of those things. And the dollar amount that I want on that is the dollar amount that you think you paid for it. I need a good faith estimate on what you paid for that item, not its depreciated value, not what you think it's worth. If you didn't pay for it and it was given to you, you don't have a deduction. If it's Aunt Gertie's $10,000 antique desk and she gave it to you, you have no deduction. But if you paid for those things at some point in the past and now we're turning those into business use, we want to make sure we capture those as a deduction. Okay, so give us a date that you started your business, what the item was, and what you think you paid for it, and we'll take those as a deduction, or at least start that deduction this coming year.
If those were accounted for in a previous year, do they get put on here again?
They do not. They should be on your previous year's tax return.
Okay.
If you've taken a deduction for them previously, you don't need to give them to us again, because we don't want you to take that deduction twice, of course. So just those items that you've never deducted before or that are new in 2014. The rent paid is probably more towards our personal trainers, where they might have to rent out a space to teach a class or whatever that might be. So that's where we're going to deduct that, that room rent, if you will. If you have to fix or maintain your printers or your computers, you got to get it worked on or fixed. That's where your repairs and maintenance are going to come in. We kind of talked about supplies, those things that really, if you're a personal trainer, you're taking those things with you to teach that class or to do your training. We can put those in supplies. Tax and licenses. There are some localities across the United States that require all businesses to register and pay a fee. Some of them are flat fees. Some of those are annual percentage of your profit. If there's not any profit, most of them don't charge you any tax or any kind of license fee. There's definitely a lot of cities. Ohio's a rough one. Pennsylvania, those are probably the two worst. Kentucky's got a lot of locals in it. Indiana's pretty easy because everything flows through our federal down to our state tax return. There's definitely some other states that get pretty picky with whatever those license fees are, and I can deal with those individually if you want to send me an email. Travel expenses. So if you're going to some kind of conference or out-of-town meeting, we want to make sure that we capture any kind of hotel or cab or airfare, buses, sky caps. Make sure you include your tip. Your tip is just as deductible as that cab fee. Make sure you keep your receipt. And again, that's what that some kind of app on your smartphone really helps with. You could really take a picture of that receipt. And really, you wouldn't necessarily need to keep it because we're going to have those as a source document someplace else, you know, out in that magical cloud that everybody talks about. If you have your meals and food, your meal by itself within 50 miles of your home, you have a legal radius around your house of 50 miles. And that does two things. You can travel your day-to-day business inside that 50 miles. And there's not a lot of qualifications that you have to assess to that trip. If you're doing business, you've got miles to deduct. The downside to that 50 miles is your meal by itself within 50 miles of your home is not deductible. Okay? So what we're really leaning towards here is maybe you are, and a lot of times this is probably also with our personal trainers, if you're eating with that person that you just finished that workout with, and you guys are going to go get a shake or a salad or whatever meal that you're going to get, if you guys pick up your own check, nothing's deductible. Okay? If you pick up both checks, you have a deduction for both meals. Okay? So again, that's kind of an all or nothing thing. We either have two meals on that receipt with someone we have a business relationship with, or you don't have a deduction if it just has your meal on it. Does that make sense?
Could I ask a question?
Sure.
To go back just slightly to the tax and licenses, or
Sure.
I think it seems to me that it should go somewhere else, but I can't think of where else. We pay a monthly business service fee. Where would that go?
What is that service fee getting you? Is that just access to the consultant side of the website, or what is that?
Yeah, it covers the that part of our website. It covers like our customer service and the shipping department, that sort of thing.
And you called it a business service fee?
Yes. So it's like $16 a month that we're required to pay as a coach.
I would really look at that as part of, you could either list it separately, or it almost looks like it's a part of your dues to Team Beachbody. So you could really put that in with, there is a category down there for dues and publications.
Okay.
So you could put that there, or you could list those separately, kind of like your prizes. You guys are going to have a couple of things that are going to be specific to your business, and might not necessarily always fall into one of our, square box categories. But it could be a due that you pay monthly, or you can just list it separately as that business service fee.
Okay. And then do we file a return for our Beachbody business regardless of how much we've earned, or is that associated with like that $600 threshold?
Yeah, so the requirement for filing a tax return to begin with is really at $400 of gross income.
Okay.
Before expenses. Okay, so let me explain that to you. So your $600 number is the threshold for someone sending you a 1099. It's not the threshold for you having to file a tax return. You're required to file a tax return once you have self-employment income of $400 or more. If not just to prove that you have expenses to eat up that $400, because self-employment tax, which is Social Security and Medicare for self-employed people, self-employment tax is the same percentage as if you were having it taken out of your W-2 at 6.2 and 1.45%. Your employer matches that with 6.2 and 1.45%. You smash all four of those together, you get 15.3. Self-employment tax is 15.3. Okay, so if you don't file a tax return, and maybe Beachbody sent you a 1099 that maybe you didn't get or got lost or whatever that is, IRS is going to add that to your tax return, and if it's more than $400, they're going to also add self-employment tax in addition to your federal tax. Okay, so the requirement for filing a tax return, the short answer is, if you earn more than $400 in gross income, you're really required to file a tax return.
Okay.
Because you can categorize yourself as a hobby, and we can make it a pretty short process. For those people who are really doing this as a hobby, or even maybe they just happen to be making that $400 and not necessarily running it as a business, for those people, we really help you categorize yourself as a hobby, and we just take your expenses up to your income. The reason for that is a hobby loss is not deductible. If we treat it as a business and we're attempting to make a profit, you're allowed to take your expenses to the extent that you have expenses. But if we're really not attempting to make a profit, then you're really a hobby, and you can only take your expenses up to your income. So you can just bring that income down to zero, and you can't take it to a negative number. For most people, we wait 3 years to see if the business is going to go. Okay, once you have that $400 in income, there is a rule that says you have to show a profit 3 out of 5 years. But at that 3-year mark, if you're still showing a loss, you and I will have that conversation to say, you know what, are we really trying to make a profit here, or are we really just kind of hanging out and doing this as a hobby? At that point, we would stop. We would still be required to put it on your tax return if your income's more than $400, but we would just stop taking all of the excessive deductions. the rule for 3 out of 5 really pertains to, you know, if we've got a business that we're showing the attempt to make a profit, we almost disregard the rule of 3 out of 5, because as long as our income continues to accelerate, as long as our income keeps going up every year, just because we might not be the best money manager and we've got a lot of deductions that bring it down to a loss, doesn't mean we can't take those deductions. I compare it to GM or Ford or anybody else. They've had a loss for 10 years. You guys are no different than them. We're under the same rules as deductibility as any corporation out there. So as long as we're showing the attempt to make a profit, and that's really the key. And showing the attempt is really showing that our income is continuing to go up every year. If you've got the expenses, we'll take them as a deduction. All right, so I think we're down to telephone and communication expenses. So when we look to deduct your internet and your cell phone are the 2 key things here. We need you as a small business person to pay for your part of your cell phone and your internet access from your business account. And I know that we might be on a family plan on our cell phone, or our internet is connected to our cable. Our internet could be connected to our phone bill. I've got clients, their internet is connected to their electric bill. So for those to be deductible, we need to pay them from the proper place. Everyone should already have a business account, a business bank account, checking account. It doesn't have to be a quote unquote business account. It can just be a separate personal account that we treat as 100% business activity. All of your income needs to go in it. All of your business expenses need to be paid from it. If there's anything personal that you want to spend that money on, you need to transfer that money from that business account back to your personal bank account and spend that personally. That's where, you know, that's where you need to buy little Johnny's shoes from, is from your personal account, not from the business account, just because that's where the money's at. For those of you who might be new, excuse me, for those of you who might be new, you might not have enough income in your business account yet to be able to pay for your internet and your cell phone. But I still need you to pay it from there, because part of owning our own business is being able to turn some of these personal expenses that you were going to have anyway, even if you weren't in business, and turning these personal things into a business deduction. Okay? So your internet and your cell phone is part of that. Your desk and your chair and your computer are all part of that. So you might be putting money in your pocket, but because we're turning some of these personal expenses into a business deduction, we might not necessarily show it on your tax return. So we need you to pay that internet and the cell phone from your business account, even if you have to transfer money from your personal account into your business account to pay those from the proper place to get those as a deduction. The important part of that is we want to make sure that you don't deposit your personal cash into your business account. Because my job as your accountant is to be able to prove what your income is. And if you put your cash into your bank account, I can't prove that that wasn't a workout fee from one of your clients. So when we're going to transfer money from your personal to your business account, we need to make sure they're separate transactions. We need a separate withdrawal from your personal account and a separate deposit into your business account. So if you do that online, it's really simple, right? It already happens that way. It shows as a separate deduction in your personal and a separate deposit into the business account. But if you're going to write a check, make sure you don't include that with any other income. So that shows as that check clearing off of your personal account and as a separate deposit into your business account, so we can cancel those out if we ever had to.
Donnie, 2 questions.
Yes.
Okay, so the first one is if somebody has not been keeping things separate in a separate account, they should start. But what does that mean for them this past year? That those things are just not deductible?
No, well, this first year, we kind of call it it's a first year forgiven thing, right? So until we get trained, everybody kind of fumbles around that first year. So as long as you've got the receipts, we'll still take all of that as a deduction, even though it's not in an isolated bank account. But what we want to make sure we do is start that process today, start getting those things paid from the right place. And then next year, if we get that same question from the same person, we're like, you know what? No, we got to make sure because we got to start treating it as a business if we want to take the deductions as a business, right? So the best time to start doing things right is today. Don't worry about before. Add up your receipts that you have. Give me all of those deductions, and then we'll move forward from there.
Okay, and then question number 2, that for me personally, I have a feeling I'll get my wrist slapped for this. I have been using PayPal for a lot. And so then when we go into my bank account, it just says PayPal, and we really have no idea what I've been spending money on.
But your PayPal account has a register. Your PayPal account is just as much of a bank account as anything else is.
Okay, so that's probably, okay, good.
Yeah, so we're just gonna use the detail from that PayPal account as your deductions, right? You still need to keep all the receipts. And I understand that, when we buy things online, we got to find some mechanism to keep those emailed receipts or, whatever that is. We got to print that email or save that email as a PDF and get that filed away. But we've got to have the paper, because your checkbook, your bank statement, your credit card statement, or your PayPal account is not proof of the expense, okay? Let me say that again. Your bank statement, your credit card statement, your PayPal is not documentation for that expense. The receipt is the only thing that is documentation for that expense. So if it's a meal receipt, just because it says Taco Bell, okay, just because it says Cheddar's or Texas Roadhouse on your bank statement doesn't necessarily mean that that's proof of your deduction. The receipt is the only proof of the deduction. This really came down because, when we used to go to Walgreens, and the only thing Walgreens had before, they were just a pharmacy. So we knew everything we paid to Walgreens was going to be a medical deduction. Well, now all of these superstores, right? So we can buy all kinds of crazy stuff at Office Depot and Staples and Walmart and, all of those things. It only says that you spent money there. It doesn't say what you bought. The receipt is the only thing that proves what you bought. Okay? So we got to start keeping that paper. And again, that's why we tell everybody to start finding some kind of mechanism that works for you to get paperless, because the paper is the key. And it's really the only thing that saves you during an audit that isn't going to have some adjustments to it. Does that make sense?
Yes, very much.
Okay. Any other direct expenses you might have? Some people might have a separate phone line. A lot of those things are kind of going by the wayside. Most people are getting rid of home phone numbers and things like that. But if you've got a separate phone line or fax line or something like that in your house, those would be deductible as long as you use those for your business. If your bank account has any monthly service charges, or that customer who bounced a check with you got you hit with a $35 NSF fee, those are all deductible. Make sure we capture those. Does your PayPal account have an annual fee on it, Tracy?
That would be good for me to know.
I haven't used my PayPal account in a really long time, so I don't know that answer. So, but if it does, ProPay, PayPal, you know, whatever online bank accounts you might be using, if those have fees, we want to make sure we capture those as bank fees as well. Okay, so dues and publications. The key things here on what makes publications deductible is at least, and this is most of the time it's really talking about magazine subscriptions or some kind of monthly or weekly, it could be your newspaper or, you know, whatever that might be. As long as it has articles twice a year on any of these categories, it could be fitness, in-home business, entrepreneurship, motivational, professional, financial, advertisements of your product or a competitor's product. All of those things make the subscription to the publications deductible. Your newspaper is one of the easiest things to win as a deduction because we know there's a business section that's in your newspaper that automatically makes your newspaper a deduction. So that could be a physical subscription or an online subscription. What we warn people about is, you know, we talk about all these deductions, but it's not necessarily to tell you to go purchase these things to have a deduction, because that's not necessarily the best use of your money, okay? I don't want to go spend $100 on magazine subscriptions just to have a deduction. I would rather you keep that $100 in your pocket, okay? And let me explain that to you. So if we go out and we spend $100 on a deduction, yes, you get to take it as a deduction. Yes, you might get $25 of that back in your pocket as part of your refund on your tax return. So it's going to save you whatever your tax bracket is. So let's say you're at a 25% tax bracket. If you spend that $100 on a business deduction, you're going to realize $25 back in your pocket as part of your deductions on your personal tax return. But if we weren't going to do that anyway, I would rather you keep that $100 in your pocket. And from a net to net standpoint, you keep that $100 in your pocket. Yes, you're going to pay a little bit more tax because you're not going to have that $100 of a deduction, but you're only having to pay $25 in tax, okay? The difference is I've got $75 in my pocket, you've got $25 in your pocket. So the emphasis is really about turning things into business use that you're doing anyway. It's more about converting those personal items into a business deduction and about timing, okay? For instance, if we were going to purchase a computer in January, I would tell you to go ahead and purchase it in December because that allows us to deduct it on that previous year's tax return. So we've effectively accelerated that deduction by 13 months, okay? So again, it's about making things you're doing anyway into a business deduction and about timing. So if you were going to purchase the next workout, the first week of January or the second week of January, buy it in December. Let's get a deduction for it. You're going to spend the money anyway, right? So that's what it's really about. You're going to do it anyway. Let's do it in December so we can accelerate that deduction by a whole year. All right. Gross wages, that's really if you had an employee that helped you in your office, if you were so lucky to need that much help in your office. And along with that goes the payroll taxes. Underneath that is that miscellaneous line we talked about, where you could put your samples down there if you wanted to. I think we talked about just leaving those up in total purchases. You can put your prizes down there or your business service fee there as well. Just give us a dollar amount, give us a good name. And again, if you think there's other expenses there that you might not think fit into one of those categories. Sometimes I'll get a note at the bottom that says, please turn over, and there's a whole list of other expenses. We'd rather it be that way than you leave them off, of course. But just give us a dollar amount, give us a description on what it is, and then we'll take the deduction accordingly. All right, so your other big deduction. So there's a lot of accountants out there that tell you not to take an office and home deduction. We hear it all the time. My previous accountant said, oh, you don't want to take an office and home, it's an automatic audit. Well, we completely disagree with that, because in 1997, we actually got a determination letter. In normal speak, that determination letter basically means they gave us another rule in the tax code that said, if you sell a retail product, store product, or manage an in-home business from your house, you automatically qualify for an office and home deduction. So that includes you. So what that means is you're allowed to deduct your office space, okay? If you're so lucky to have a whole room, if that room's 10 by 10, you've got 100 square feet that we are going to deduct. If it is part of a room, we get to take that space that desk takes up, your file cabinet, your shelving, whatever that looks like for you. We get to take the floor space it takes up, and then 6 feet out from it, because we got to be able, the Corps of Engineers says it takes 3 feet for any person to move through a space, right? So that's why our hallways are at least 3 feet wide. So we've got to be able to walk around our chair. So that's why we get 6 feet out. Now you have to stop measuring if you're, if it's in the corner of a bedroom, if you hit another piece of furniture or a bed or a wall, of course you have to stop measuring. So you can measure your space. We get some pretty cool drawings from our small business people. So don't be shy, just draw it up, and then we'll take care of the percentages. Okay, so what we do with that, so let's say you've got a 1,200 square foot house, and you've got a whole room that is a deduction for you, okay? And it's that 10 by 10 room. That's roughly 8% of the house, okay? So we're gonna compare that 100 square feet to the 1,200 square feet, or whatever your scenario is. The average home office space is between 8 and 12%. That's what the norm is. We're going to take whatever that percentage is for you. We're going to take that percentage of all of those things you see down there at the bottom of that worksheet. Utilities, and that includes your gas, your water, your electric, your cable, garbage, sewer, you name it. They're all utilities. So we get to take 8% of those as a deduction. If you rent, we're going to take a percentage of your rent, your homeowners or your renter's insurance, a percentage of your repairs and maintenance. And we talk about repairs and maintenance, not repairs and improvements. So the deductible things are fixing or sustaining the things you already have. So we can deduct your plumber coming in to fix your hot water heater, not a new hot water heater. As soon as you put the word new with whatever you want to ask me about, if it's new, I'm going to say no. New roof, new deck. You put new pavement on the driveway. We can seal the driveway. We can't get new pavement on the driveway. We can fix the roof. We can't deduct a new roof. We can seal the deck. We cannot deduct the construction of a new deck. I can get the mulch in your flower beds. I cannot get your new flowers, okay? It's the difference between maintenance and improvements. Those improvements increase the value of your home and are not a deduction for you, okay? So it's repairs and maintenance. And then, of course, we always get a deduction for your property tax and your mortgage interest, but if you're showing a profit on your Schedule C, on your business tax return, a percentage of those we definitely want to take back against that income, because it's not only going to save you federal tax, it's also going to save you on part of that self-employment tax, which is that 15.3 that we talked about before. Okay, so measure your space. You give me the totals, I'll take care of the percentages. We rarely, what a lot of people get hesitant in with an office and home deduction, we rarely depreciate the home unless someone is to the point of having a lot of profit and owing a lot of tax. We will go after every single little deduction, but we usually do not depreciate the house, and that eliminates, in tax speak, the recapture of the depreciation if you ever went to sell your home. And that would be the only reason it would make taking the office and home even a little tricky. It's not necessarily that tricky, but if it's going to save you tax, we want to take a deduction in the current year, not knowing how long you're going to be in the house, of course. But for the most part, we usually do not depreciate anybody's home. But we definitely want to take a percentage of all of the operating expenses from the home. Any other questions for me?
There were a couple that came up. One is there is an online sort of freelance website that a lot of us use called Elance, and we can pay people through there to do a multitude of different tasks for us. So when we are paying, sometimes they might be doing advertisement stuff for us. Sometimes they might be doing stuff that never gets seen, you know, like putting just information in a document, data entry. It could be anything. Any idea as to where those would go, or would it depend on what they were actually doing for us?
We could probably just keep all that together, because if they are really a multi-service type of company that can really do anything for you, advertising to administrative stuff, as long as they are a corporation, and that's probably the critical piece there, because you're really contracting them, right? Because Elance is really talking about being a freelance assistant, okay? Yeah. We call them virtual assistants.
Yes.
If it's an individual, then we look at them as possibly needing, you might need to send them a 1099. So what I'll do, you know what, let me take a look at something here real quick. And you said it's elance.com, right?
That's right.
What I will do, I'll look into them and we'll see exactly what we need to do with them, because we want to make sure that you guys are treating them correctly. If they're a corporation, then we're good. We can just take them either as a professional fee. They are a pseudo contract labor, but we don't necessarily have to send them a 1099. We only are required to send 1099s to other individuals or partnerships or things that are doing things that we could do as part of our own business. Okay, so I will check on that for you, and Tracy, I'll get you an email, and we'll talk about if we need to set them up as a contractor and send them a 1099. It looks like, yeah, they're going to be a lot. They are a corporation. I just found it. Okay, so we don't need to worry about any kind of 1099 or contract labor type of stuff. We can just put them in as a professional fee. So you can put them in the same place that you're going to put the fee to Accounting Unlimited if we were going to do your tax return.
Okay, okay. And then a lot of us have a workout room. Do we treat that as office space in our case?
Okay, so we could deduct that workout room if you trained people in that room.
Only if we have other people coming into our home to be in that room.
Correct. Otherwise, you would just have an office space. Okay.
The other question within that is that many of us as coaches, we'll have what we call fit clubs, and they may be in our home, but those people coming over for fit club do not pay. So Fit Club is used as a promotional tool for us, where we're bringing people to us, or we're meeting together in a space to build the relationships to then sell them products, but the actual
Beautiful.
time of Fit Club is not paid.
Gotcha. So that would still work for me. That space, even though you're not necessarily charging that person for that space, we're using it for the purpose of advertising your business. Okay. Right. Because we got to get them in, get them worked out, give them a shake, get them hooked. Right. So in that instance, if you've got those people that are potential consultants for you or potential customers for you, and you're bringing them in for that workout, for that fit club, I would be good with deducting that space as well. And with that, also becomes a deduction for, so let's say my wife does Pilates. So I've got this big giant reformer table. If you guys know what those are, it looks like a big torture chamber table. It's crazy looking. But if she was teaching or had a fit club and she was doing that, we would be able to deduct that reformer table. Because it's all about trying to get them attached to you to start either selling or using your product, right?
Yes, definitely. And there was only one other thing, and that was, are you able to speak at all to the cost of hiring you guys?
Sure, absolutely. So, and we're not ashamed of that. We work really hard for what we do. An average cost of a tax return that has a Schedule C, has a small business on that 1040. And that cost includes your federal, your state, all 4 of those forms and anything else that you need. You and your husband's W-2s and all of your home expenses, donations and car tax and mortgage interest and real estate taxes and all of that stuff, what we'll call a normal personal tax return. The average cost of a tax return here at Accounting Unlimited is between $275 and $300.
Perfect. Thank you so much. And I will tell everybody that if you decide to file an idiot's tax return, which is what I typically do because I know nothing and ask a bunch of idiot questions, that is worth every penny, and they don't fire me from using their services. So thank you so very much. I'm very much indebted to you for spending the time this evening with us.
You are very welcome. What we always want to do is bless you guys for the holidays and bless you guys for the new year for a very prosperous business. So thank you very much.
Thank you. And if you would make sure that I have absolutely, like the contact information to give to all of these coaches to refer them to you.
Sure, absolutely. You can always contact me on our website at accountingunlimited.com. My email address, direct email address, is dhappel, DHAPPEL, at accountingunlimited.com. Gosh, all the regular stuff, right? I'm on Twitter and Facebook and you name it. We are in process of redoing our website, so I was kind of jealous when I saw Tracy's because I'm hoping mine looks that good when I get done with it. But we are in process of redoing that. This coming year, we're actually setting up client portals so that we can securely send information back and forth and giving all of our clients access to our paperless program here. So that if you needed a copy of a tax return or a W-2 or whatever that might be, you'll have access to that from your side of that portal. So a lot of cool stuff going on. Technology's getting neater and neater. So if you need us, we're here anytime.
All right. Thank you, Donnie. You have a good night. I appreciate it.
Thank you, Tracy. Good night.
Bye.